Good afternoon, and welcome webinar participants. My name is Chiquita Jones. I will be serving as your moderator today.
On behalf of the South Carolina Minority Business Agency, operated by DISA Incorporated, the NBDA COVID-19 project, and the City of Columbia, I would like to welcome you to this Business Structures webinar, the second in a series of webinars on a variety of topics delivered by those with the experience needed to help you navigate the business world and some of the difficulties it may contain. Today's webinar is designed to help minority and small businesses find their way through the often complex world of business structures. The presenters for our webinar today are Mr. Ernest Cromartie III, attorney at law, owner of the law offices of Ernest W. Cromartie, LLC in Columbia, South Carolina, and Mr. Harold Singletary, owner of East Cooper Financial Services, LLC in Charleston, South Carolina. Together, they have more than 37 years of experience and a wealth of knowledge that will be shared with us today. Mr. Cromartie is an accomplished attorney handling trial and corporate experiences. He has an extensive background in finance and the handling of public and corporate transactional matters. He has been practicing law in Columbia for more than 17 years. While Mr. Singletary is an entrepreneur with over 20 years of tax and financial expertise. He is the owner of the accounting solution business firm, East Cooper Financial Services, LLC. He has progressive experience developing and implementing financial systems, strategies, processes, and controls that significantly improve profit and loss scenarios. Again, thank you all for joining us today. We hope you find this information beneficial and extremely useful in your daily business practices. Before we bring Mr. Cromartie on, we would like to get a better idea of the composition of business structures among us today. Please take a moment to answer the following question. Thank you. And now, without further ado, I would like to present Mr. Ernest Cromartie, who is going to speak with you this afternoon about the various business structures and the potential impact on your business. Good afternoon, Mr. Cromartie.
The third, and I would like to thank the South Carolina Minority Business Development Agency operated by DISA, the NBDA COVID-19 project, and the City of Columbia for facilitating this timely and informative business structures webinar series. I have the pleasure of partnering with Mr. Harold Singletary, the accountant here for today's webinar. Mr. Singletary, would you like to introduce yourself?
I appreciate that. Thank you, sir. I'm excited to accompany Mr. Cromartie on this business structure webinar and bring value to each of your businesses. I would like to take a moment as well to thank the NBDA team, City of Columbia, and COVID-19 project for this opportunity. Let's get the day started.
Let's go. Ms. Tiffany Flood is going to help us with our slide. Next slide, please. When it comes to business structure, there are many things to consider. Startup, ownership, liability, control, and management. At the outset, I want to say for everyone, if you take nothing else from my presentation, incorporate, incorporate, incorporate your business. First things first, seek good legal counsel and a good accountant. These two professionals will help you better discern the best corporate structure for your business. Next slide, please. Questions that you might ask yourself are, how do I want to pay myself? What kind of control do I want to have? Next slide, please. Your choice of business structure affects many things. How much you pay in taxes, how you pay your taxes, your ability to borrow funds and raise capital. There are several types of business structures that we'll discuss today. Sole proprietorship, partnership, of which there are three: general partnership, limited partnership, and limited liability partnership, as well as corporation, C Corp, Subchapter S, limited liability companies, and not-for-profits. Next slide, please, ma'am. Sole proprietorships. A sole proprietorship is a business only having one owner and is the most basic form of business structure. The owner is the business. Formation requirements are minimal, usually only requiring a social security number of the owner and the business license to perform the task of the business owner. No EIN or articles of incorporation are needed. Ownership, management, and control of the sole proprietorship is 100% with the owner. The owner has 100% responsibility. Next slide, please, ma'am. With 100% of the responsibility comes 100% of the liability. The sole proprietor is considered one and the same as his or her business, which means that all of the liability associated with the business attaches to the owner. There is no distinction or separate entity between the sole proprietor and his business. This is an interesting point to note as we move forward to corporation, which means that under a sole proprietorship, your personal assets may be attached for the purpose of paying liabilities, debts of the corporation. One other issue to consider when it comes to sole proprietorship is taxation. Mr. Singletary, would you address that point, please, sir?
Thank you, Mr. Cromartie. Yes, as far as the major advantage for sole proprietorship from a tax standpoint is that it's simple, but with that simplicity comes responsibility. And from this webinar, hopefully you can discern a better approach. There are no separate taxes for your business, and you report all of your business income and losses on your personal income tax return. You should make estimated tax payments on a quarterly basis and be sure to track how every dollar is received and how every cent is spent. We will touch this subject again in the accounting section of this webinar. You will also be required to pay self-employment taxes. These are contributions to Social Security and Medicare that regular employees normally have taken out of their paycheck, sometimes referred to as payroll taxes. Keep in mind that as a sole proprietor, you will be taxed on all of your revenue. This is regardless of whether or not you actually withdraw the money from your business bank account or take a paycheck. Mr. Cromartie, you can proceed.
Thank you. Next slide, please, ma'am. To sum it up, sole proprietorship, ownership, one person. Liability, unlimited personal liability. Taxes flow through to your personal taxes only. Next slide, we see the pros and cons of the sole proprietorship, just as a brief summary of what was just spoken of during the webinar. We will move to partnerships after this slide. A partnership exists when two or more individuals or entities agree to share profits. There are three types of partnerships: general partnership, limited partnership, and limited liability partnership. Next slide, please, ma'am. Under the general partnership, the formation requirements are minimal. Basically, it's a sole proprietorship for two or more individuals. Ownership, management, and control of the general partnership resides with the partners as owners. Each of the partnership owners is legally authorized to manage and control the partnership business. Under the general partnership, partnership agreements are encouraged, but they are not required. They are strongly, strongly encouraged. Next slide, please, ma'am. Under the general partnership with respect to liability exposure, like the sole proprietorship, general partnerships have unlimited personal liability when it comes to debts, liabilities of the business. Each partner is personally liable for the debts, taxes, everything chargeable to the partnership. In many jurisdictions, partners may even be found liable for the actions of their other partners acting on behalf of the partnership. That being said, be careful who you do business with and who you call a partner. Mr. Singletary, would you address taxation for partnerships, please, sir?
I appreciate that, Mr. Cromartie. And what I'm going to discuss for you as far as the general partnerships, the LPs and the LLPs, they all are treated from a tax standpoint as a sole proprietorship for more than one person. That is, the business income and expenses will be included on each partner's individual tax return. Each partner's appropriate amount of losses and revenues as laid out in the general partnership agreement will be reflected on their own personal tax return. However, the process of doing this is significantly different than a sole proprietorship. The partnership will file an annual tax return that is a 1065. And from that 1065, which is just information flowing of income and expenses based on your agreement and percent of ownership, you will receive a K1. That K1 then moves over to your personal taxes, and you will be paying, the self-employment tax based on that document. Thank you.
Next slide, please, ma'am. The next form of partnership is a limited partnership. A limited partnership exists wherein there is a general partner and other limited partners. The general partner continues to have unlimited personal liability, while the advantage of the limited partner is that he or she has liability up to the amount of their investment. When it comes to formation requirements of the limited partnership, they too are minimal, generally requiring a certificate of limited liability filed with the Secretary of State. Ownership resides primarily with the general partner. He or she carries the personal liability exposure, and so therefore they have the majority of the control and management say-so with respect to the limited partnership. Liability exposure for the GP is unlimited, but of course for the limited partner, there is the limit to the amount of the investment. And as Mr. Singletary already explained, the taxes for the GP, LLP, and the LP are the same. Next slide, please, ma'am. Next, we have the limited liability partnership. Basically, the limited partnership or the limited liability partnership has no general partner. All of the partners benefit from not being liable directly or indirectly for the debts and obligations or liabilities of the LLP. The formation requirements are a little bit more, filing a certificate of limited liability with the Secretary of State, and often LLPs are required to carry some form of business liability insurance. Ownership resides with the limited partners. The liability exposure, of course, is limited to the investment of the limited partner. Management and control resides with the limited partners, and the tax treatment is as has been explained previously. One thing that should be noted with respect to partnerships is that many states have adopted a version of what's known as the Uniform Partnership Act, making laws similar throughout the United States for partnerships. With respect to everything that we are sharing today, I would caution you, we have a nationwide audience. There may be some unique things to your jurisdiction, and so I would advise that you consult with an attorney or an accountant in your area as you move forward with making decisions as for the best corporate structure, depending on your business. Let's move to the next slide. To sum up partnerships, ownership two or more individuals, liability, unlimited personal liability unless structured as a limited partnership, and taxes, self-employment tax, except for limited partners. Next, we'll see the pros and cons of partnership, and then we will move to the following question. Next, we have one more polling question. If we can present that. So I am going to start with the results of the polling question. We asked why you haven't incorporated if you're not incorporated. The majority of the individuals stated that they didn't know where to start the process. Some felt that it was a complicated process and others were not interested in doing so. Let me address all three of those at the outset of my presentation with respect to corporations. The reason why you want to incorporate is because you need to protect your personal assets. We all enter into business for the purposes of serving our community and making profits. We want to be able to protect those profits. We want to be able to protect our homes, our vehicles, our family. part of that protection comes from incorporating. So let's go into the corporation. Corporations are legally, statutorily created business entities that are separate from their owners. What is so important here is the fact that you have separation from owner and separation from the corporate entity. This is where your protection comes in. Let's move to the next slide. Formation. All corporations have formality requirements. Filing articles of incorporation, bylaws, EIN. Corporations being separate can be sued on assets, purchase, sell, receive, lease property, borrow monies, mortgage, or pledge any of its property. At the point in which the corporation can do these things, there is a clear separation between the owners of the corporation and the corporation itself. The legal fiction of the corporate entity protects its owners, and that protection is why all of us should seek to incorporate. Next slide, please, ma'am. In addition, corporations can operate in multiple jurisdictions, and the lifespan of a corporation is perpetual. It is not limited to the owner. Next slide, please, ma'am. Corporations do require some additional work in terms of filing additional documentation and making sure you have corporate governance. When it comes to management and control of the corporation is provided by the shareholders. And when it comes to taxation, I will defer to Mr. Singletary.
Thank you, Mr. Cromartie. On corporations, a corporation is a separate legal entity, which means that it files its own tax return. It is completely separate from your individual tax return, and it has a different tax rate system. You as the owner are not taxed on the profits from your corporation directly. Instead, you're only taxed on the amounts that the corporation actually pays you in the form of dividends or a salary. That means that the corporation gets taxed, and then you get taxed on your income from the corporation. This double taxation makes corporation an unappealing business structure for some small businesses. Corporations have many advantages that are not tax related. For example, corporations provide liability protection, as Mr. Cromartie has already referenced, in the event that the corporation or business gets sued. This helps corporate owners avoid personal responsibility and does not put their own asset at risk. I definitely want every business owner on this webinar to understand that the formation of your structure reduces your risk. And I can't stress enough that legal counsel and having an accountant on your team will help you set the foundation for success. Mr. Cromartie, you can continue.
Thank you, sir. Let's move to the next slide, please, ma'am. Again, why incorporate? Unlimited personal liability versus limited liability. That is why all of us should consider incorporating. The risk of personal liability exposure far exceeds the complications of incorporating, not knowing where to start, or the thought that it might not be something that you're interested in. Let's move forward to the next slide. The C Corp is the most traditional form of corporate structure, requiring articles of incorporation, pre-incorporation steps, bylaws, corporate governance. Owned by shareholders, the liability exposure, of course, is limited. Management and control will be a board of directors. The number of owners is unlimited, and the term of business is perpetual, as mentioned before. Let's move to the next slide, please. Summary. The biggest point of your C Corp is that owners are not personally liable. Let's move to the next corporation. The next corporation is a S Corp or subchapter S corporation. This is a traditional C Corp that is elected to be taxed like a partnership or with pass-through taxation. The formation requirements of an S Corp are those of filing articles of incorporation, pre-incorporation steps, bylaws, and corporate governance, just like the C Corp. However, the qualifications are a little bit more extensive. The ownership is with the shareholders. The liability exposure, of course, remains limited. Management and control remains with the board of directors. The qualifications are limited to the pass-through tax status. Mr. Singletary, could you address some of those qualifications and restrictions as relates to taxation, please?
Okay. An S corporation is a unique combination of a corporation and a sole proprietorship. It offers many of the non-tax related benefits of a corporation, including liability protection. It also provides the simplicity of being taxed on your own personal tax return. There is no double taxation in an S corporation because it is considered a pass-through entity. Like a sole proprietorship, however, you are responsible for all of the income taxes related to profit. This applies even if those profits are still sitting in a corporate bank account. Only certain businesses are qualified to be S corporations. Most of the requirements, as Mr. Cromartie has stressed, deal with the size of the company. For example, you can have no more than 100 shareholders and eligible shareholders, including individuals, trusts, or estates. Shareholders in an S corporation cannot be partnerships or corporations. We can proceed to LLCs.
Next slide, please, ma'am. Here we have a summary of the S Corp, and then followed by that, we have some pros and cons, and we will proceed through those slides to the LLC. Thank you, ma'am. The limited liability company is a business ownership structure that allows for the best of all business structures in one entity. It allows the business owners to pass through their taxes to their individual tax return if they so choose, like a sole proprietor. It also allows that you may have as few as one single member, like a sole proprietorship, or multiple members, like a partnership, or a C Corp, or a subchapter S corporation. Interestingly enough about the LLC, the formation requirements are minimal, requiring only the filing of articles of incorporations. If you can open a checking account, giving your name, your address, and social security number on a form, then you can open and start an LLC. There are some additional governance requirements that we will touch on. However, I want to stress that the ease of opening and starting an LLC is no different from that of having a checking account for your business or for your individual personal needs. Management and control of the LLC resides with the member or members. And taxation, as we touched on, is pass-through taxation. Mr. Singletary, can you talk about the taxation elements of the LLC, please?
Yes. Limited liability companies are unique in that they can decide how the IRS should treat them from a tax standpoint. LLCs can be treated as a corporation, partnership, or part of the LLC's owner's individual tax return. How the LLC is structured will often dictate this information. For an example, an LLC with at least 2 members is considered a partnership unless it elects to be treated as a corporation by filing Form 8832 with the IRS. An LLC that only has 1 member, on the other hand, is treated as a disregarded entity, and income taxes are part of the owner's personal tax return. However, even 1-member LLCs can also elect to be treated as a corporation. There you go, Mr. Cromartie.
Thank you, sir. What's important when thinking about the LLC, and I will have to be transparent, it is my go-to form of corporate structure for most of my clients, is that you have the protection of the C Corp or the subchapter S. You have the separate entity protection of your C Corp, the traditional corporate entity, while you also have the flexibility of a sole proprietorship, the pass-through tax status of the partnership, and most importantly, it is an exceedingly easy form to file, and so the barrier to entry is as simple as the sole proprietorship. Let's move to the next slide. Just to be touched on is something that's called piercing the corporate veil. Once you've established the separate legal entity of your LLC, your subchapter S corporation, you need to maintain that protection for your personal assets, which means you need to properly structure and establish and run your corporation as a separate entity. The law provides you the separate status. You must honor the law and provide the adequate support mechanisms through corporate governance for your corporation to keep that separate status. Piercing the corporate veil, next slide, please, ma'am, occurs when the law reaches through your corporate entity to your personal assets if it is not properly maintained. And when I say it, I mean the corporation. The law looks to certain elements to pierce the corporate veil. Some of those include gross undercapitalization, commingling of funds, using your corporate account just like you would your personal account, non-functioning of other officers or directors, absence of corporate records, the fact that the corporation is merely a facade for those operations of the dominant member or stockholders are things to be concerned with. So as I tell all my clients, treat your corporation like a separate entity and it will continue to protect you. Let's move to the next slide. Here we have a brief summary of the LLC, one or more individuals, owners not personally liable, personal tax only. And then following that, we have the pros and cons, highlighting the flexibility of the LLC. Following this slide, I've compiled a business structure comparison chart. I would recommend all of you who are interested in which structure works best for you to kind of use this as a tool. I've lined up sole proprietorship, general partnership, limited partnership, C Corp, S Corp, and LLC. And when you compare each of them, it kind of gives you a better idea of how each compares to the other. And what you'll see is that the LLC has the benefit of all preceding different business structures while also having the benefits of limited liability. Next, we'll go to the next slide.
Thank you so much, Mr. Cromartie. We certainly appreciate your expertise on the matter and sharing that information with us today. And now we would like to continue our business structures webinar with Mr. Harold Singletary, owner of East Cooper Financial Services, LLC, who will speak with you about best accounting practices for your chosen business structure. Good afternoon, Mr. Singletary.
Thank you, Ms. Jones. Before we begin discussing accounting and bookkeeping, please take a second and answer the poll question. Okay. Starting a business can be confusing and overwhelming. In order to limit the stress from startup, begin by creating a vision board that will become the foundation of your business plan. This will pinpoint the areas that attention is needed, and if you're in business already, add team members where you recognize your weaknesses so you can focus on what you do best for the business. Remember these 6 steps. Open a bank account, track your income and expenses, develop a bookkeeping system, set up a payroll system, determine your tax obligations, and always periodically reevaluate your methods. Next slide, please. Open a bank account should be your first step in business. After you have legally registered your business, decided on your structure, you will need somewhere to house your business income and pay business expenses. Opening a business checking account is your next step. Next slide, please. When you're looking at opening a business bank account, I say shop the market. Look at options. Look what they offer you as a small business client. But to open that account, you're going to need the things you registered your business with. That's an EIN number. That's your articles of incorporation. And some banks require additional information. So you want to make sure you request what will it take for you to open up that operating account. And I recommend following opening the operating account by opening a savings account. So we'll touch on that here shortly. Next slide. Why do I need a separate account? This is critical. Even as a sole proprietor, and obviously it's required for other forms of corporation to have a separate business account, but it is highly recommended that you separate yourself, which is why you're going to look at structure. You want to be able to keep your personal expenditures in your personal checking account and everything related to business in your operating accounts. Next slide. A good rule of thumb is to put 25% of your income aside. And that's why you're making it, because eventually you will have to deal with self-employment tax. You will have things that you need to address as far as your payroll tax. So by putting 25%, especially as a sole proprietor, you begin training yourself to pull away from the income while you're earning it versus waiting to the end of the year and looking backwards and saying, I've spent that money. Okay, next slide. Tracking your expenses. The foundation of solid business bookkeeping is effective and accurate expense tracking. This is a crucial step that allows you to monitor the growth of your business, build financial statements, keep track of deductible expenses, prepare tax returns, and legitimize your filings. Establish a system for organizing receipts and other important records. Technology has allowed us to have the ability to make this less labor intensive, and I recommend you looking at some of the various apps and accounting platforms that will allow you to not be so, to be paperless and seamless. Next slide. Receipts to pay attention to: meals and entertainment, out-of-town business travel, vehicle-related expenses. You have to be mindful, especially on meals and entertainment, people, deducting meals that aren't directly related to business. If you're at a business meeting and you're, conducting business, write that person's name on the receipt or make note of it in the calendar log to show proof. Also with out-of-town business travel, the IRS can be wary of people claiming personal vacation trips as business expenses. So your receipt trail and documentation of recording is critical to basically support you if there is an audit that arises. Next slide. Continuing with the receipts to pay attention to: receipts for gifts. There's a great example there for gifts like tickets to a concert. It matters whether the gift goer goes to the event with the recipient. Otherwise, if you attend, it's not a gift. It's basically entertainment, and you can do entertainment within your business, taking out clients, customers, etc. But you want to make sure you're accurately recording how these expenses go into your accounting platform. Home office receipts are critical. That's a red flag in IRS and filing taxes. You want to make sure that you document completely by business use versus personal use on these type of expenditures. Next slide. Any expense that's used partially for personal or partly for business must reflect that use. So you need a percentage of use. Cell phone was given as an example. You need to understand if you're using your personal cell phone in business, there's a percentage of use that you need to factor for your taxes. And the same goes with the home office, with your vehicle. If you have one vehicle and you're taking the mileage deduction, well, you need to accurately track business miles versus personal miles. There's, again, so much with technology and Mile IQ apps that when you get in the car, you turn it on, it will track your distance from point A to point B, and that will become your log. It is critical to keep that mileage log, either hard copy or a digital application, so that you have supporting documentation. Next slide. Right now, please take a second to answer this next polling question before we get into accounting and bookkeeping. All right, so we did good there. Can we go to the next slide, Ted? Accounting is a high-level process that looks at business progress and makes sense of the data compiled by the bookkeeper by building financial statements. And all of you were right on the poll question, so I won't reinstate that or comment on that again. So good job there. Let's go to the next slide. Developing a bookkeeping system. For the DIY person, do it yourself, you may choose a QuickBooks or a Quicken or a Drake accounting software platform to utilize. You can outsource to a part-time bookkeeper that's either local or cloud-based. And if your business is big enough, you should have an in-house bookkeeper or accountant on staff. Next slide. Developing a bookkeeping system. Business owners need to determine whether they'll use the cash or accrual method of accounting. The definition for both are below, and cash method is usually the standard method most business owners will use, which is recognizing the revenue and expenses when it actually is received or paid. Larger corporations may use accrual method, which is recognizing revenues and expenses as the transaction occurs. Next slide. Setting up a payroll system. Now, when we say set up a payroll system, I highly recommend that you outsource this to a third party. Even CFOs and accountants in companies and corporations usually outsource that because payroll tax can be critical. You're factoring retirements, 401k, health benefit plans, and an ADP, Paychex, or a local payroll provider in your area would be suitable. I highly recommend that you outsource this because the payroll tax liabilities and issues that can arise for not properly filing these things timely are worse than personal tax liability. Next slide. Okay, we are at Q&A. And so I know before we pass it on, this was a great opportunity to kind of give you guys an overview about business structure and accounting. And if you're already in business and you don't have an accountant or an external accountant, you're just dealing with your tax person, you haven't filed at least a LLC for your business, I highly recommend and hopefully that you walk away to see it should be something you do. And your accounting is just as critical as setting up your structure because you want to be able to dot your I's, cross your T's. You want to be able to look at your financial statements and understand what your business is doing. So I'm excited to open the floor and let's get some questions in and see if we can assist.
Thank you, Mr. Cromartie and Mr. Singletary, for providing us with this valuable and extremely useful information today. I'm quite certain that all of our attendees will be able to take away something of value today and put to practice in their own businesses. We'll now take a few moments to answer any questions you may have. If you do in fact have a question, please select the chat icon and type your question there. All questions will be answered in the order they were received. I will read the question aloud and provide an opportunity for it to be answered by one of our guests today. One of the first questions we have is, are there any recommendations on apps to use to monitor your expenses? I'll let you take that, Mr. Singletary. Yes, I was responding in the chat room, and QuickBooks is a user-friendly platform that if you're not a large company, you can use the online version, cloud-based, the desktop version, either Windows or Mac platforms. And so, being a QuickBooks Pro and expert for QuickBooks, I recommend that for a lot of people starting out, and those that have a larger base company, there are platforms that we can roll up to handle your needs. But definitely everyone should be able to, download and incorporate what they're doing within QuickBooks, which allows you to reconcile your bank statements, list all of your credit card charges at a click of a button, be able to see your profit and loss, forecasts. All of these things are required in business to be able to handle your cash flow management. So QuickBooks is a great platform. Thank you. One of our attendees today says that she is trying to decide between an LLC and a 501c3. Mr. Cromartie, can you give her any advice?
Well, generally, the LLC is a for-profit business. The 501c3 is generally not for profit. And so I think one of the key questions there is, what is the purpose? What is the goal of the business? This is the type of question where you sit down with an attorney, sit down with your accountant, and you kind of dig into what the goal and purpose of the business is. And then you can kind of make a better decision as to what the preferred entity would be. But at the outset, the LLC and the 501c3 have different underlying purposes. And so I would say, why are you going into business, and what is the takeaway goal for that entity? I'd be glad to speak with you offline, and you can direct questions to MBDA to do so.
Thank you. Our next question, if you are an S corporation with only one shareholder, how critical is it to have a shareholder meeting yearly?
I will address that to some extent, and I would say this. Maintaining your corporate governance is exceedingly important. If you have your subchapter S, you have your bylaws and your articles. It would be good, of course, to state in your bylaws, your operating agreement, what when that is, when meetings are held, what constitutes a meeting. Make sure that you establish what the rules are by which you're going to run your business. And for the purposes of being able to establish a pattern and practice of keeping the business separate from the individual, I would say it is in your best interest to have a meeting, or at least to acknowledge that a meeting was held on said date at said time every year at the same time. As a one shareholder subchapter S corporation, it does seem a little bit unnecessary, but if you want to maintain the protection of the corporate status and you don't want your corporate veil pierced, sitting down with yourself, opening a meeting, having the meeting, and closing the meeting is worth keeping the corporate formality in place.
Yes.
Thank you. Our next question deals with the S corporation taxation. Our attendee is asking if you could explain a little more about the S corporation, giving an example. For instance, if there is $100,000 left in the business account at the end of the year, what happens? Let's say that the owner takes $50,000 in payroll for himself and $20,000 in dividend, and then left $100,000 in the account. What happens with that?
So with that question, I'll basically give an overview. You know, anything left and earned in that business is still taxed. So it would behoove you to have your accountant either on staff or your tax accountant do tax planning throughout the year to do bonuses or distribution. Regardless, your K-1 will reflect the income left in the bank account and what the business earned, and you will be taxed accordingly based on the tax rate. And S Corps is a pass. You're going to get a K-1, so that's going to come over to your personal tax returns, and you will be taxed on that detail.
Great. Our next question, what is a pass-through tax status? What exactly does that mean?
Pass-through tax status means that the entity itself will not be taxed. The S corporations, the partnerships, all receive a K-1, which breaks down a summary of what transpired in the business, and that comes over to your personal tax. So it's a pass-through entity, meaning that the S Corp, when you file that corporate tax return, what you have to do, will produce a K-1 that comes over to your personal tax. On your personal tax return is where you will pay the tax on the business earnings.
Can either of you address private equity arrangements?
I'm familiar with what a private equity arrangement is. The question seems a little open, and so maybe if I could get a better idea of what's being asked regarding a private equity arrangement. It sounds like someone is investing in some type of corporate structure, be it a C Corp or maybe a limited liability partnership, but I'm not clear about that question. So a little more information might be helpful.
That is correct. And you may also want to reach out directly offline to have that question addressed a little bit more in depth. Our next question, what distinction can you provide between an LLC and a 501c3? I'm trying to determine the best option for us between these two. Thank you.
I think you want to, I think with the LLC, you know, we broke down and told you what that detail and structure. You have a umbrella of opportunities forming an LLC. You can elect to be taxed as a C Corp, S Corp, etc. 501c3 is nonprofit. You know, it's a nonprofit business. You don't pay taxes. You are required to file a 990 tax return, but they're on different spectrums. I think the structure, you would definitely need to sit down with legal counsel and an accountant to understand what the business is providing. And to even be elected as a 501c3, you have to be a community-based type organization. What are you doing for the community? I think if from the vision board and your business plan will drive you in the right direction, whether you form a corporation or you go after the 501c3 nonprofit election. Mr. Cromartie, you want to add to that?
No, sir, that's it. You really need to look at what the purpose is for your business and your goal, and then that kind of determines where you go.
Thank you, gentlemen. Our next question: how much does it generally cost to set up an LLC, including attorneys or accounting fees, assuming a simple small business?
I will address that, and something that I want to just state, a lot of the more specific answers, such as this, I can speak to when it comes to my current jurisdiction, which is South Carolina. In South Carolina, the filing fee for an LLC is $110 made payable to the South Carolina Secretary of State. And the attorney fee associated with that, which generally includes meeting with the attorney, having bylaws set up, helping facilitate the EIN, things of that nature, ranges, I would say, from anywhere from, maybe $500 to $1,000, depending on the attorney, and depending upon the degree of consultation and legal expertise that is required to help you make that decision. Don't quote me on those fees. I don't want any of my legal counterparts saying that I overcharged or underbid their services, but nonetheless, that's generally what I've seen in the market to help start up with an LLC. It is a very streamlined, no barriers to entry process, and there's really no reason not to set up an LLC if you want to do business anywhere in the United States. Mr. Singletary?
You nailed it on the head. It's, I highly recommend the fees to, file an LLC are minimal for the coverage and risk reduction that is available throughout that umbrella. And early on in the webinar, Mr. Cromartie also referenced that's kind of his go-to. And I like it because it, like I said, it has an umbrella effect. It allows you to be, a LLC, or you can be elected to be taxed as a corporation, C Corp, S Corp. Okay.
One of the things that I would also add, when you are shopping for a legal professional or an accounting professional, you can ask those questions directly. You can sit down and maybe have some type of preliminary consultation to ascertain, the best fit for you with respect to the professional services being sought. And I would also like to add that your pre-incorporation expenses, and I'm getting into the tax area, so I'm going to need Mr. Secretary to confirm this, but your pre-incorporation expenses are a business deduction. And so whatever the cost for the attorney, whatever the cost for the accountant, whatever the filing fee with the Secretary of State, those are automatic business deductions from day one. And so when you look at those expenses, they are not lost, they are part of the business.
Yes, and I will confirm that, all of those are deductible business expenses. Even within your startup, there are going to be things, if you're not in business yet, there are going to be some startup costs that you can amortize when you start generating revenue. And that's working with your accountant, your tax preparer to understand, but you always should record and notate those things. As far as the fee with the Secretary of State, it's only $110 to file the articles of incorporation. But if you do it online, the printing fees and online fees brings it up roughly to about $145. You get your EIN tax ID number with the IRS for free. You can register that on the irs.gov website. So we're talking, $150 to get your articles in play, and that's not your legal counsel fee or your accountant fee with the assistance, but that's a small amount to sleep at night. Yeah.
Thank you. Our next question: is an online business starter like Zen Business, for example, a good place to start for opening an LLC for the paperwork it requires?
I'll address that to some extent. A lot of individuals like to use the online services, and I can't, confirm or deny that they're good or not. I don't have any personal knowledge of Zen. What I can tell you is this: a lot of the unique things with respect to your jurisdiction are known by the legal and accounting professionals in your state. And so you get the benefit of them knowing the most recent case law or the most recent development with respect to LLCs or with respect to subchapter S or with respect to federal treatment or state treatment. And so while you may save yourself a little bit of money doing it online, there are some intangibles that are gained that help you form that structure accurately and properly with sitting down with a professional. In addition, I always think it's good to have your team. You know, someone you can call, pick up the phone and ask an accounting question or a legal question as you move forward. And as you start your business, you want to have their team. You want to have your accountant, you want to have your attorney, you want to have someone readily accessible to help you navigate the waters of your business structure so that you can focus on the business and the service you're providing. Last but not least, one of the things that I always do for my clients is when I set up their LLC or their new corporate entity, I send a letter regarding piercing the corporate veil, which kind of puts them on notice of all the steps they need to take to make sure they maintain the corporate protection that we just accomplished or acquired for them. And that's generally not something you're going to get from an online service. That follow-up helps maintain the hard work you put in place.
Great, thank you so much. Our next question, is the double taxation of having an S corporation more beneficial than an LLC?
Okay, I'll take that one. The S Corp is not the double taxation, it's the C Corp, okay? And when you say more beneficial than an LLC, you know, that depends on what your structure is. You know, if you're a small business, double taxation may not be something you want to look at. The S Corp is a pass-through entity, partnerships as well, pass-through entity. So the double taxation falls to the C Corporation. And where that double taxation comes in again is, you know, whatever the corporation does, you know, income, less expenses, less depreciation, all of the above, the net income is then taxed at the corporation. You do not pass that over to a K-1, but as the owner, your salary and or dividends that the corporation pays you is then taxed on your personal. Therein lies the double taxation.
Okay, thank you, Mr. Singletary. Our next question, I'm running a plumbing company and am already an LLC. How do I incorporate a 501c3 to help out in the community?
Mr. Singletary, you want to?
Yeah, I can chime. So you're running a plumbing company, you're already an LLC, which is great. You will not incorporate the 501c under the LLC. It's a whole separate process. You will need to go through the 501c3 application, which can look like a book, but it's generally information that you have to complete to understand what you're giving to the community and what's the benefit. And know that all assets that are within a 501c3, if they dissolve, have to then be turned over to another nonprofit. Those assets don't walk with you, because you were not taxed on any of your income or your expenses, all right? So to incorporate, I say sit down and look at the structure. You have to build out the vision of what that nonprofit will provide to the community, which will then be factored. You have to go through the process to be approved to be a 501c3 by the state and the IRS.
Great. We have another one that falls along the lines of 501c3. Our attendee asks, I am looking to get state grants. Can I do that without being an LLC, or can I only get state grants being a 501c3?
I'll chime in there. You know, I have 3 businesses I run and 1 received a grant. So no, you do not have to be a 501c3 to receive a grant. You just have to be aware of the opportunities that are out there based on your industry and within the state. So no, you don't have to be a 501c3 to receive grant funding.
Okay. What is better to report under my Schedule C as an LLC, mileage or gas receipts?
For your tax preparer, we'll look at both. I say track both. You track your fuel expense within your accounting platform, and we will then also compare the mileage. The IRS tax rate changes each year by a point or so. It's roughly around 55 cents, 56 cents per mile. That adds up. But if you're not tracking your mileage, then how will you benefit from that deduction? So the Mileage IQ app, a hard log book, but you need to, in your accounting platform, you will not be putting a mileage expense in your accounting platform, but you will be recording and logging each time you fill up at the gas station that's related to your business expenses. But the tax preparer would want to see both so that he can maximize your deduction based on the use of that vehicle. If it's 100% used vehicle in your company, not personal and business, then you get to factor more things off of that vehicle: depreciation, mileage, repairs, maintenance, property tax, parking tickets, all of the above. So your record keeping helps you drive what's the best option to take, mileage or actual.
Thank you. How should one approach setting up a worker-owned cooperative?
That is an interesting question. That is definitely, I think, unless Mr. Singletary wants to chime in, an offline type of question, because that is a unique situation.
Yeah, that's an offline question. Maybe they'll reach back out to the MBDA team with more clarity, and maybe we can assist from there.
We'll certainly pass the contact information along to all of our attendees. Our next question: what are the indications someone needs to convert from an LLC as a pass-through to corporation?
I'll tackle some of that. It really depends on some of the factors that we addressed. Maybe the size and scope of the entity, maybe looking at whether or not you want to raise capital, look at what the various owners or members of the LLC want to do. There are a lot of questions that go into transitioning from an LLC to a traditional C Corp. You have some of the things such as liability, whether or not you want to, whether you can benefit from double taxation as opposed to the pass-through that you probably currently enjoying with the LLC. Some of those are some of the key questions you need to sit down with your attorney or tax professional to kind of evaluate, where you are or where the business is in its growth pattern. What I can say is that while many small businesses are LLCs, there are also very large profitable businesses that are LLCs. And so there may or may not be the need to convert to a traditional C Corp unless there are some key things that you're trying to take advantage of. And you still may be able to get the advantage of those things in the LLC. Mr. Singletary?
I agree with what you said, Mr. Cromartie. And, it's really, that question kind of drives kind of offline for me, because I would want to, see what the business, forecast, what it's done in the past, what's your financial structure, what type of LLC are you kind of listed as, multi-member, so it's a range of things that would factor into converting to either a C Corp or S Corp. But that would drive, like I said, additional facts that you would have to pass across.
Thank you. Now, Mr. Singletary, I think this next question is going to be specifically for you.
Okay.
What are the negative effects of mixing business expenses with personal expenses out of the business account?
My gray hair just stretched out longer. Please, for everybody on the call, there is always a negative effect of mixing personal expenses with your business expenses. Mr. Cromartie touched briefly on piercing the corporate veil. And if you are structured as a corporation or LLC, you have just pierced your corporate veil by doing so. There is no need to commingle personal and business expenses. You are the owner of your company based on your structure, especially being a sole prop or a single member LLC. Take a draw, take a distribution, equity distribution from your business. Setting yourself up on payroll to cover those personal expenses. I tell all of my clients, if there's a personal expense, you transfer what is needed to your personal account and you handle it on your personal side. So then I see it as a member draw versus, I went and bought clothing from Macy's. Do not mix your business expenses and personal expenses.
I think that's some very good advice. We're down to our last 3 questions, ladies and gentlemen. Thank you so much for staying with us this afternoon. Should you file your business taxes separate from your personal taxes?
That one depends on your structure. I think we walked through what relates and is a part of your personal taxes. That's a sole proprietor. That's a single member LLC. Those things are included with your personal taxes. If you are a partnership, a C Corp, a S Corp, you are required to file a corporate tax return. Partnerships file a 1065, C Corp's an 1120, S Corp's 1120S. And then K1s are distributed from each one of those filings to come into your personal taxes. Sole proprietors, single member LLCs, you file a Schedule C within your personal tax return.
Great. So you can do both, LLC and a 501c3 for one business. Is there a cap you can pay yourself being a nonprofit?
Nonprofits work up a budget. You're not for profit. So usually there's community donations, there's grants that follow in, and even to receive a grant, you have to have a budget. And usually most nonprofits break even at the end of the year because they're budgeting what they're receiving in to account for the expenses that are expended.
Okay.
One of the things that I would also add when it comes to paying yourself as a nonprofit, there are generally best practices out there when it comes to how the nonprofit is run. And there are some, there are ratios and percentages of contributions and things of that nature that serve as guidelines when it comes to, compensation of directors or other individuals. And so while I wouldn't say there's a cap, there definitely is a manner by which to determine what someone should be paid based upon what they're doing, the role they're playing, and how much is being brought in terms of contributions. And so you want to be aware of those best practices that are out there.
Thank you. Should you file your business, I would like to change the name of my LLC. How do I go about doing that?
It's just an amendment form with the Secretary of State for South Carolina. You can go on their website, you pay a fee, and you can change the name. With the IRS, if you already have an EIN for that LLC, you will need to update them, and you can go on their website and find the contact us number. Standard number is 1-800-829-1040, and you can get directed to the right department to address EINs and name changes.
One of the things I would add to that is, before you submit a form seeking to change your name, make sure that the name to which you want to change your new entity, or the name you want to change for your current entity, is actually available. Because if you seek to change the name of your company to a name that already exists, then you won't be able to accomplish your goal. And so I always tell people to check to see if the name's available, so you don't have any administrative complications.
Thank you so much, ladies and gentlemen. That concludes the question and answer portion of our webinar this afternoon. Are there any final nuggets of wisdom that our presenters would like to share with us this afternoon?
Incorporate. Always have key people around you that can help you drive your business. Do not try to wear all of the hats. Focus on what you do best, which is why you're in business, and add people to become assets to you to help you drive the end result. That's it.
I agree.
Ladies and gentlemen, I want to take this time to thank all of you for participating in our Business Instructions webinar this afternoon. We certainly hope that you found this information useful and that you can put it to work for you as you forge ahead in your business endeavors. After the webinar, you will be presented a brief survey about the information presented today. Your feedback is very important to us, so let us know how we're doing. And just as a note, all of our attendees will receive a PDF copy of today's presentation. Contact information for our presenters is available to you as well. for any offline discussions. Again, thank you for attending today's webinar. Please take note of our upcoming webinars for the months ahead. We hope that you'll join us again for any of the topics that you may find of value to you. You can follow us on Facebook, Twitter, or you can view the webinars on YouTube. Thank you and have a wonderful afternoon.